Hi and welcome back to the channel. This video will be based around a very interesting UK growth company which I will be purchasing on Monday open. If you enjoy this video, please give it a thumbs up and subscribe to the channel as it would really mean a lot and help out in a massive way. We can take a look through the company's business model, previous year's results and future estimations on the company's performance. We can then take a look at the current share price to see if it looks as if this could be a good risk versus reward candidate. None of this is financial advice and I encourage you to always do your own research before purchasing any stocks. So let's take a look into Blue Prism. Blue Prism are an RPA, Robotic Process Automation focused company who have been around since 2001. They've currently got a market cap of over 800 million, with 2020 revenue coming in at 140 million and this year are aiming for between 170 to 180 million in revenue. Their business model is all based around generating cost and time efficient tools which they refer to as digital workers, which is a form of machine learning or AI who collate information between different systems, doing away with a lot of the typical boring, time-intensive admin tasks and duties that usually us humans would be carrying out. Here's a little bit more information about these digital workers. A Blue Prism digital worker is a super organised, multitasking software robot that works alongside your people to automate and transform business processes. Like humans, digital workers can develop new skills over time, getting smarter and more capable. With AI, Blue Prism digital workers can be trained to take on increasingly complex tasks, manage vast workloads, and make critical decisions to tackle work with greater speed and productivity, thereby becoming a force multiplier in your business. All this sounds very interesting stuff, doesn't it? Let's have a look and see how they've been performing as a business and if there's any key information that jumps out. This information has been taken from their full year 2020 results, which were issued in January, but I've manually inserted the loss amount shown in red. Due to being a high growth company, they currently aren't profitable and are still running at a loss, but this is common with high growth companies. Some of the positives that jump out firstly is the revenue growth from 55 million in 2018 to 140 million 2 years later is absolutely fantastic. 147% increase in cloud bookings and the 97% growth in registered users are all promising signs for a growth company. The loss of 80.6 million is an improvement from 2019, but I'm not getting too excited about this as some analysts think they were able to save up to 17 million in expenses from travel due to COVID restrictions. We'll move on into the most recent earnings just now and have a look through these. So this is from their half year results. First point we've got here is they're on track for cash break even, so that's good, that's a step in the right direction. And we've also got 98% recurring revenue, also really good. Top 50 customers are spending about $1.5 million in annual recurring revenue. And a few of the small points there and a few mentions of the awards and placings, nothing to get too hung up on. But the booking acceleration of 35% is promising and good news for us investors. Blue Prism have over 2,000 customers and are diverse across industries and are presently in 170 countries. These are some of the blue chip names that they provide services for. American Express, Pfizer, Walgreens, Coca-Cola, L'Oreal, Shell, BT, and the list goes on and on. So these are all very large enterprises which is good to be associated with. Now into the nitty and gritty aspects of it. 80.4 million revenue is a 24% year-over-year growth, which is good, and the negative 8 million EBITDA isn't too bad at all as well. 98% gross retention is good, and it shows that customers are staying. The upsell at 22% is okay, but you probably want a bit more of that if it's going to be a high growth company, but there still gives a plenty of room for opportunity to be had here. One of the last comments in their presentations is that they're doubling down on their R&D, so that shows that they want to keep their foot on the gas to keep innovating and providing new services to these existing customers. Looking into the future, analysts are expecting revenue to keep growing at nearly 28%, but by 2023 still to have negative 24 million in earnings, although it's still going in the right direction. So let's have a look at the balance sheet. Balance sheet looks absolutely fine with more assets than liabilities, short term and long term. And what's really positive here is the fact that they've got zero debt and they haven't had any debt for more than 5 years. Currently sitting on 126 million in cash, which is absolutely brilliant. Lastly, now for the share price. Between 2014 and 2018, it rocketed up more than 2,000%, which is just absolutely crazy. What a ride that would have been. But now it's cooled off and had a bit of a roller coaster ride since then. It's been up and down 50 to 100% numerous times over such a short space of time, which shows how volatile it is. It is a speculative play, but I really like it here for an entry point, as it hasn't broken below this support level at around 800 pence, and it's recently completed a double bottom, which could be a bullish indicator. I'm looking for 100% gain in this over the next few years if possible, and take the profits on it. Analysts have a price tag of about £1.38, which is about a 63% upside on this. If you've enjoyed this video, please leave it a thumbs up and comment below on what you think about this company. We'd love to know your thoughts on it.